in the powerful name of our soon-coming Jesus Christ. My name is Maligudu. I am going to be taking you through the bank reconciliation. You can ask yourself, what is bank reconciliation? Now, this is a process of where you compare and you reconcile the bank statements that come from the bank and your cash book or your own records of the month. This is a process to ensure all transactions are accounted for. And you are also able to identify if there are any discrepancies in your records. It also prevents fraud and theft from the bank account of the church. So the question is, what is the aim? What is it that we want to achieve by performing a bank reconciliation? The aim is to verify the accuracy of accounting records. Now, if there are accounting records that have to be verified, we need to have a bank statement. You also need to have the cash book, which you have been using for the whole month. And in that bank statement that you have received, you will find that there is a list of deposits that were made in the bank statement. And there are also payments which were paid in or from the bank statement. Also, in the bank statement, you will find that there are returned payments with the bank statements. And some of those returned items, you find that some of them were honored and others were not honored. And what will be the reason that some of the items are not honored? If you remember, the bank statement usually comes out before month end. So you will also recognize that if I have to deposit the money on the 30th, that amount might not appear on the bank statement. And some of the returned items could be due to insufficient funds. Therefore, what happens is that when you check the bank statement of the bank, or that comes from the bank, and you try to compare it to the cash book that you have been using the whole month, you will find that in most cases, it does not agree. The balances are not agreeing. So if the balances from the two documents are not agreeing, then this calls us to do what we call adjustments. We need to, as we do those adjustments, recognize them. And we have to recognize those adjustments from the treasurer's records and from the bank's record. And where do we recognize this? We recognize them in a bank reconciliation. So we will need to, do the bank reconciliation. We prepare the bank reconciliation. Now, what are the steps when we want to prepare the bank reconciliation? The first step is that you will have to compare, you compare the deposits which are recorded in the bank account with those that are recorded in the cash book. And you will find that some of those deposits are appearing or others are not appearing. And what you do, you have to make a note. If there are deposits which are not appearing in the cash book, you make a note. Those which are not appearing on the bank side, you also make note of that. And the second one will be, you have to compare the payments recorded on the bank statement with the cancelled payments. Remember, sometimes you have to receive, as you receive the bank statement, there will be some payments which are honored and those which are not honored, right? And then In that way, you will need to make notes again to say EFT number 2, EFT number 10 were not recognized. So the payments which are also to be made by the treasurer, sometimes they are done, or if you have a creditor that needs to pay you, you find that as the person pays the church, you find that this amount, when the bank is trying to make sure that it gets into your account, they find that there are no enough funds to cater for the payment that the church is expecting. So some of also, when you are looking at the bank statement, there are items that you will also need to make note of. You will have the bank charges. And the bank charges will be composing of the immediate payment fees, the email fees, the notification fees, the monthly payment fees, the service fees, and the deposit fees. Now, before you do these comparisons, you will need to sort your EFTs numerically to ensure that you don't jump any item, or you don't jump any EFT or any deposit or any payments that were done or not done. So sometimes the variances that we are talking about, that you find that the two documents might not be agreeing. They will give us the variances or also the differences. And there are items that will make sure that these differences appear either in the bank statement or in the cash book. Now, the first item that can cause a difference will be a cash recorded as received by the church, and the same cash is not yet recorded by the bank. That causes the difference. The second one, cash can be recorded as payment by the church, whereas the bank has not recorded that amount. And the third one will be the cash recorded as received by the bank and not recorded by the church. So this time, it's the bank that has recorded what it has received, but in the cash book, it does not appear. Also, the payments that are recorded by the bank and may not be recorded by the church. And the fifth one, which is the last one, there are errors and omissions that can be made in both documents, that is in the bank statement or in the cash book. After looking at the items that can cause the difference in our records, I do have some transactions whereby I would love us to engage to see if we can, as to how do we prepare our bank reconciliation to ensure that these two documents, they speak to one another. In the first transaction, we have the cash balance in the bank statement as at the 30th of 2023. 2020, okay. Okay, our first transaction, the first and the second one, these are the balances at the end of the month of April, and from the cash book and from the bank statement. From the bank statement, we have a balance of 2,236.21. And in the cash book, we have a balance of 2,354.37. Now, when you look at this transactions, the balances, they call for an adjustment, because we usually say what is in the cash book should also be in the bank statement. So it gives us a difference. Therefore, that difference will need to be acknowledged, all right? The third transaction goes to the deposits recorded in the cash book during the month. On the 5th, we had 2,286.63. On the 12th, we had 1,356.55. On the 19th, we have 962.41. And on the 26th, we had an amount of 764.97. And then on the 30th, we had an amount of 361.50. Now, we in the beginning, we said that amounts that are deposited usually at the end of the month, it is not always possible for the bank to record that amount of money. So this is what is happening. We end up having a 361.50. So let's go to our bank reconciliation and see how are we going to account for these transactions. Right? I have chosen to give my church a Tandeni SDA Church as a name for it. Right? And this Tandeni Church is using First National Bank. Its account number is 70313152239. And then we have the opening balance, and the opening balance in the bank statement, usually the bank statements are numbered. That number is important. And then you write the date of the amount as it appears on the bank statement. You can see that 2,236.21, it comes on the upper portion of the bank reconciliation. And we spoke about two balances. And the second balance, which is the balance that is in the cash book at the end of the month, was 2,354.37. All right? And then we spoke about a deposit which was not recorded in the bank statement. So we have to recognize that amount in our bank reconciliation. And we are going to add this amount of money to the bank, because this money is going to have an effect on the opening balance, on the balance of the bank statement. So we have put it as a deposit of 361.50 as an addition. Then you go back to your transactions. We go to transaction number 4. It says payments cleared by the bank. The EFT 792 with an amount of 16 rands 21 cents and 42 rand 86 cents. Now, when you check your transactions, you will find that at a later stage, this 16 rands 21 cents had been recorded, but the other item of 42 rands 86 cents was not recorded. Therefore, when we go to our bank reconciliation and we realize that item EFT 799 was not recorded. So everything that is in the cash book and it's not in the bank statement, it will have to be minus, it will have to be subtracted. So we have 3 transactions, or 4 transactions in fact. The 4 transactions, they come from transaction number 5, payments in April recorded in the cash book. We have all those amounts: 4297.50, 15309, 38.44, 49.31, 87.26, and 75 rands, 62.24, 41.60, 25.65, 15.67, 1027 28889, 430 1761, and then the last one is 48 rands 1 cent. Now, as I looked at the banks, at these payments that are recorded in the cash book, as I was comparing it to the bank statement, I realized that 153 rands 9 cents and 25 rands 65 cents, together with 48 rands 1 cent, they were not recorded in the cash book. They were recorded in the cash book, but they did not appear in the bank statement. Okay, let's go to our bank statement. These are the amounts which are in the cash book, but they are not in the bank statement. 4286, 15309, 2565, 48. When you put them together, they give it to 6961. That is the amount that will need to be deducted. Okay? It will need to be deducted from, it's in the cash book, but it's not in the bank statement. So this amount of money will have an effect on the balances of the opening and the closing balance. We also have, when you go to our transactions, transaction number 6, there are deposits shown in the bank statement. The 2286.63 and 962.41, the 76497. So when I check both of my documents, I realize that these amounts have been acknowledged well, or they have been recognized accordingly. Then we go to transaction number 7. It says paid items returned with April bank statement and recorded thereon. Okay, they were recorded, but when you look at all these transactions, they were returned, but they were recorded, and there was just an item 821.71.61 which was not recorded. It was not recorded in the bank statement. Oh, I'm sorry. It was recorded in the bank statement. All right? But when we look at this amount of 71.61, let's go to transaction number 12. That item appears there again. 821 was returned by the bank for 71.61 for office supplies, was recorded as 17 rands 61 in the cash book. So what is in the bank, what is recorded in the bank, it's not what is recorded in the cash book. So when we take the two amounts and recognize the 71.61 less what is recorded in the cash book, it gives us a difference of 54 rands, which means the 54 rands was not recorded in the cash book, but the bank recorded the whole amount. So it will also need the adjustment. The adjustment, when you go to your bank reconciliation, you will see it. All right, let's go back to our transactions. So this 71.61 was recorded in the bank, but not the whole amount was not the whole amount was recognized. Then we have cash transaction number 8, where it says cancelled item returned with April bank statement and recorded thereon as 23 rands 92. It was returned during with the bank statement, but it was then recorded in the cash book, this 23 rand 92 cents. Let's go to our cash bank reconciliation and check. So we have, now we are going to the 2395. The 2395, these are charges on bank statement, not in cash book. So all what is not in the cash book it will have to be added in the bank. It will have to be recorded in the cash book. So we have the 23 rands 95, which will have to be recorded, and then we also have when you go to our transactions, we have 8 rands, which is for service charges. It's not recorded in the cash book. Therefore, if it is not recorded in the cash book, it means it is the duty of a treasurer to ensure that this money is recorded in the cash book, because they have paid for the service, they have paid the bank for the services that they rendered, but they did not recognize that amount. There is also a members item for 30 rands, which was returned and marked as not sufficient funds. So this amount should also be recorded where it should be recorded in the cash book. All right, so let's go to our transactions and see how they will appear on the bank reconciliation. That amount on the 3rd, it's recorded there in the cash book, 23.95. We have the service charges of 8 rands, which are recorded. We also have the error that was committed by the treasurer of 54 rands, which needs to be recorded in the cash book, because in the bank statement it has already been recorded. And now we also have a not sufficient item of 30 rands, whereby it was returned with the bank statement, but it was not honored. So if it is not honored by the bank, it will have to come back and be recognized in the cash book. Now there is an item item 11, which is 89 rands. It's interest that the church account earned from the bank for having a positive account, a positive amount in the account. All right, and it is 89 rand 65 cents. If it is 89 rand, this money was earned by the church, but is not recorded in the cash book. So, because it is not recorded in the cash book, this amount will have to go to the bank reconciliation. And the bank reconciliation, you have to minus this amount from the bank statement, and it will need to be recognized in the cash book. All right, now the total amount which is on the bank statement but not in the cash book, it amounts to 115 rands 92 cents. So now when you take your calculator, you say 2,236.21 plus the deposit of 361.50 minus 269.61, and then minus 89 rands 65 plus 115.92. It will give us a 2,354.37. And this is how we reconcile our accounts for both two books. Now, what happens with what is not in the cash book? That interest, what do we do with it? That amount of 23.93, which was not recorded in the cash book, the service charges, the error that was performed, and the not sufficient item, they will need to be recorded in the cash book. And usually when they are recorded in the cash book, it means that either the balance will have an increase in the cash book or a decrease. For instance, as we look here, there was an interest which was received. That amount belongs to the church. And the 30 rand is an amount that it's an amount that was not honored, which was supposed to come to the church into the cash book. So it will decrease. Bank service will decrease, and also the check book error or the item 821 will also decrease, because it has also increased in the bank, but it was not well recorded in the cash book. I hope with the transactions that we have gone through, you are able to have an idea as to how the bank reconciliation can be performed. It is very important as a treasurer to ensure that at far right of your cash book, you ensure that you perform this activity without fail. Now, when we come to conclusion, we say bank reconciliation, it is the most important activity when it comes to reconciling your records at the end of the month. Do not ignore this exercise, as it allows you as a treasurer to perform more smarter and be ever prepared. Should there be any impromptu reports that you need to do that are required from you to share with the board finance committee, you will ever be ready. And I continue to plead with our treasurers, just make sure that you